Today I want to talk about how these brokers have run out of shares as they've actually stopped selling APE. I also want to talk about whether we should DRS our shares or just stay with these unreliable brokers. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Still Up tweeted saying yesterday I was cool buying those APE shares through Fidelity, but today is a different story. He said I tried to buy 20 shares each of AMC and APE, but they were not taking my APE order. He said new deposits now have to clear and sit there for 4 to 5 trading days before APE shares can actually be purchased. Therefore I ended up buying 26 AMC shares instead. That's all I can risk right now. It seems these brokers like Fidelity are now trying to dissuade us from buying APE shares, as the cash has to sit in our accounts for an additional 4 to 5 trading days before any APE purchases can be made. It's unusual that he was allowed to buy APE with these newly cleared funds, but he had to wait an additional 4 to 5 trading days to buy those APE shares. And as Mully tweeted, he said, I've also heard other people are having those same problems buying APE and Fidelity as well. Interesting. It seems these brokers are getting more and more unreliable with our APE and AMC shares. At first they're selling us IOUs, now they can't even sell us IOUs or real shares either. Many of these brokers didn't even receive real APE shares and didn't allocate these shares to our accounts until many days, if not many weeks, after the dividend was issued. Therefore, should we stay with these unreliable brokers or should we DRS our shares and direct register those shares outside of the brokers? Well, former SEC branch chief Lisa Braganca tweeted saying, how about this alternative? She said buy shares of stock and direct register those shares. She said brokers cannot lend shares and brokers do not get any lending fees as those shares are not being lent out. Therefore, those shares can't be borrowed by short sellers, and APEs are doing this with GameStop. Now, obviously, I personally believe the word of former SEC branch chief Lisa Braganca must be quite reliable because of her previous, fairly higher position. However, there's obviously been a lot of negative speaking about DRSing over the last year and a half, and that's why I think it never really caught on with the AMC APEs. As Charlie tweeted, he said, oh, and by the way, 1 full year later, and DRS is a noun. He said DRS has nothing to do with the price of a stock, as DRS shares are still owned in the broker system by Seed & Co. Seed & Co is still affiliated with these market makers, with these brokers, with these broker dealers, and with these trading platforms. Therefore, even though you're direct registering your shares, you're still registering those shares under a separate name in the same system. He said, I've still got no argument against it, but only more and more evidence that DRS has done nothing. Some of you may say, Tom, DRS is the only way to cause the AMC squeeze, and if we do DRS our shares, AMC will squeeze instantly. But at the same time, you could have said the exact same thing about GameStop last year or a year and a half ago. It's been a year and a half, many shares have been DRS'd from the GameStop apes, but GameStop still hasn't squeezed. If DRS could instantaneously cause the squeeze, then surely GameStop would have squeezed sometime last year as soon as shares were being direct registered. Therefore, it's been a full year and a half and DRS has still done nothing for GameStop, as the GameStop stock still hasn't seen the squeeze. And he said to anyone that uses DRS or has actually DRS'd their shares, the price has only gone down, and here's why. He said the process of immobilization of shares allows intermediaries to create something like an uncertificated derivative entitlement based on the underlying pool of securities in their custody. Basically saying that Computer Share could be created these uncertificated derivative entitlements because they hold a significant number of GameStop and AMC shares in their accounts that are effectively immobilized. An uncertificated derivative entitlement is effectively like creating a separate security that can be shorted and can also be naked shorted as well. Now, I personally don't really see any significant downside to DRSing our shares because it's not as if our shares aren't being naked shorted already, but I also don't really see any upside. We know the GameStop shares are still being lent out day after day after day, even though the majority of the float is actually direct registered. And that's obviously because these market makers are still creating synthetic GameStop shares, even though the majority of the float has been DRS'd. Therefore, I don't think that DRS actually impacts the AMC or GameStop stock either way, because both of these stocks haven't yet seen the squeeze. But I do think it's worth moving away from these unreliable brokers or any of these brokers affiliated with payment for order flow or any of these brokers affiliated with the mainstream media that is obviously majority owned by these hedge funds. As I've said before in my videos, the only brokerage that I can think of that's completely unaffiliated with the mainstream media, unaffiliated with these hedge funds, unaffiliated with Citadel, and unaffiliated with the SEC and FINRA and the Fed is Moomoo, because it's simply based out of China. Moomoo obviously isn't majority owned by Citadel, it's not majority owned by BlackRock, they don't have any ex-Citadel or ex-BlackRock or ex-big bank employees sat on their board, they don't accept payment for order flow, and they route their trades on their own. And right now you can currently get 15 free shares worth up to a whopping total of $30,000 if you sign up to Moomoo right now using the link in the description below. But something I know that will cause the AMC squeeze is the current market crash and the current economic crisis. And Credit Suisse is experiencing significant wealth client withdrawals. It says several wealthy families in Asia as well as in the Middle East are withdrawing hundreds of millions of dollars, if not billions of dollars, due to the health of the troubled Swiss lender. Obviously, if additional cash liquidity is being withdrawn from Credit Suisse, it only edges them closer and closer to that margin call, as they'll fail to meet their capital requirements. It says the report indicates that some clients in Singapore and the Middle East had made requests to withdraw cash or shift assets in the tens of millions of dollars or more. One Asian family office that pulled out cash said it was told by the bank that there was a queue of unprocessed transactions that had resulted in some temporarily backlogs. And as a result, in bold letters, the article says that Credit Suisse's AUM, which is assets under management, is threatened. Obviously, if clients are withdrawing their assets, that means Credit Suisse has less assets under management, meaning they have less cash to meet their collateral requirements, making them closer to a margin call. And on top of that, Bloomberg is reporting that Credit Suisse may face an $8 billion capital shortfall in 2024. That basically means that if they do survive until 2024, they're going to have negative $8 billion in cash. Meaning that obviously by 2024 they will almost certainly fail those capital requirements, as they won't even have zero cash left, they'll have negative $8 billion. It says the firm is exploring radical cuts to its volatile investment bank, including spinning off large parts and hiving off its securitized products group. Alternatively, they're debating a capital raise, but their stock price is near all-time lows. Obviously, if at this point Credit Suisse decide to sell additional shares and raise further capital, they're going to be diluting their stock massively and the stock price will fall. It says while raising capital is one option under consideration, Credit Suisse executives would strongly prefer to not issue equity with the share price near record lows. Credit Suisse is clearly struggling more and more every single day, and as Jan-Jack tweeted, he said, how long can they continue propping up government bonds and these major banks to avoid margin calls and subsequently a market crash? He said if the 2008 crisis was due to a corporate debt default, then 2022 will feature both a corporate debt default and a sovereign debt default as well. And on top of that, the IMF is saying that markets are right now at risk of a disorderly sell-off. They said higher rates and lower growth threaten to expose financial fragilities, according to top fund officials. The IMF has warned that risks to the stability of the global financial system have materially worsened, cautioning the markets are at risk of a disorderly repricing that will hit emerging and developing countries most severely. They said obviously UK financial markets recently teetered on the verge of collapse. The resulting sterling crash and surge in borrowing costs forced the Bank of England to step in to avert an even worse financial fallout. But they said the measures, coupled with those from the government, have not yet fully reassured investors. I think it's really interesting that many of these major news sources and many of these major institutions are now starting to come around to the idea of a severe recession. Only a few months ago they were saying a recession was not going to happen, or we'd almost certainly achieve a soft landing, but now many of these institutions are believing we are indeed in store for a recession. They're now being much more open, talking about just how close we are right now to a collapse with Credit Suisse and with the UK government as well. I think that's because they know that a collapse and a recession is not just a reality, but at this point, a guarantee. And as I said, that's brilliant news for us, the AMC apes, because a financial crisis or a recession practically guarantees the AMC squeeze. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.